Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money here. And stay tuned tonight at 6 for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back on the air at 6 o'clock this evening with Mark Hood, the CEO of the Union Rescue Mission, with compelling stories of how men, women, children, families, and seniors are finding their way home thanks to the Union Rescue Mission and the Just Help One initiative at justhelpone.org. Mottek On Money, live on the air now on 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Mixed finish for stocks today with earnings news from Walmart taking the spotlight, along with retail sales and a new reading on inflation at the wholesale level out today, also in focus. The Dow coming in for a closing gain of nearly 300 points, back to 42,323. The S&P 500 of 24, and the NASDAQ pulling back 34 points, breaking a six-day winning streak for that tech-heavy index. Walmart said its prices will rise as it can't avoid passing on the high cost of tariffs to consumers. Walmart stock slipped slightly on the day. Retail sales overall slowed sharply in the month of April, barely rising. And that reading came out today. Also, wholesale inflation unexpectedly slowed last month. Some more good news, even as many of the president's tariffs began to kick in. The producer price index, we heard this morning, fell 0.5% in April and rose at an annual rate of 2.4%. We did get the consumer price index earlier this week, showing inflation pressures also easing to four-year lows. Fed Chairman Jerome Powell today weighing in, warning of a broad economic uncertainty, saying the economy might be entering a period with more frequent supply shocks and volatile inflation. Meanwhile, the price of oil pulled back today after President Trump said the U.S. is close to maybe doing a deal with Iran over its nuclear program. Among the casualties of the day, weighing on the NASDAQ, shares of Meta, the parent company of Facebook, down more than 2%. So the Wall Street Journal reported the tech giant will be delaying the rollout of its flagship AI model. Big merger deal confirmed today, as you first heard here yesterday, as reported by the Wall Street Journal. Dick's Sporting Goods has made a bid for Foot Locker. The company announced today a deal to purchase Foot Locker for $24 per share, or $2.4 billion. That's a pretty big premium compared to Foot Locker's closing price of $12.87 on Wednesday. Foot Locker stock today soared 70%, up $11 and change to $23.90. Dick's Sporting Goods shares tumbled more than $30 to $179 and change, a drop of 14.5%. United Health Group stock down as much as 17% today, reaching its lowest levels in 5 years and seeing a more than 50% drop over the past month. The stock plunging following a new report in the Wall Street Journal that said the company is facing now a criminal investigation related to possible Medicare fraud. Earlier this week, the company announced its former CEO would replace Andrew Whitty, who has been CEO there since 2021. On the economy, J.P. Morgan Chase CEO Jamie Dimon not ruling out the possibility of recession, saying today that, in his words, "I wouldn't take it off the table at this point." Jamie Dimon, of course, the boss of the biggest bank here in the United States, speaking to Bloomberg today. Coinbase stock took a tumble today after disclosing that cyber attackers has stolen sensitive consumer information and threatened to publish it unless the company paid a $20 million ransom. According to Yahoo Finance, the largest U.S. cryptocurrency exchange, said no passwords or private crypto wallet codes have been compromised and that the data leak impacts less than 1% of Coinbase's monthly transacting customers, according to a blog post from Coinbase. Instead of paying the ransom, Coinbase reportedly establishing a $20 million reward or bounty program for information leading to the arrest and conviction of the attackers. Coinbase stock tumbling about $19 today at $244 and change. Here in California, a new initiative to save Prop 13 has been filed by the Howard Jarvis Taxpayers Association. Prop 13 passed decades ago here famously places limits on the annual increase on the taxable value of property here in California. Taxpayer advocates have been working to protect Prop 13, and I'll discuss the very latest with Susan SHELLY this hour. She'll be joining me, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights right here on 790 KABC and our great Cumulus Media sister station KSFO in the Bay Area. Nervous times for LA businesses with the city council voting to raise the minimum wage to $30 an hour. The council voting to approve a package of minimum wage increases for workers in the tourism industry ahead of the 2028 Olympics. This despite objections from business leaders and business groups. We'll discuss that in detail this afternoon from AIDAN CHAO. He'll be joining me live, chairman of LA Tax, the LA County Taxpayers Association. But first, on your money, the markets, the economy, and the whole works now. Paul DIETRICH, Chief Investment Strategist at Wedbush Securities, headquartered right here in Southern California. Paul DIETRICH, great to have you with us here this afternoon.
Thank you, Frank.
Wonderful to have you with us. A lot to unpack today. Give us your reaction to the latest market moves we saw here today.
Well, I think we're basically in what we call a bear market rally. People were excited about the, taking the tariffs down from 145% on China down to 30%. They're excited about other deals that may be in the works, but really nothing has changed. I mean, even the UK deal that they did last week, on April 2nd, there was a 10% tariff, and today there's a 10% tariff. Really, nothing has changed, and at the beginning of the year, it was a 2% tariff. So prices are going up, and I think when people start seeing the effects of the tariffs, which they probably won't see until mid-June, late June, that's when everything's going to hit the fan, and I think that's not going to be a good period for the stock market.
All right. Have the odds of recession increased or decreased, you think, at this point?
I don't think we're in a recession right now. If you looked at the GDP figures that just came out that showed a negative quarter, it was largely because of people front-running the tariffs. And if you basically take out that portion of the GDP calculation, we were a little bit positive, but basically flat. I think once we start seeing we're seeing retail sales starting to go down, we're going to see unemployment going up because of the tariffs. And as all these things happen, I think we could see 2 quarters of GDP losses, either coming in this quarter or the following quarter.
We certainly saw a pretty good rally after that U.S.-China trade announcement, putting things on pause basically for 90 days. What do you think is going to happen after 90 days here?
Well, that's a good question. But, the rally came about purely, from emotion and momentum. It was completely untethered to any underlying fundamentals or facts. Basically, 145% tariff on our side and 125% tariff on the Chinese side. Everyone realized that nobody was going to pay that. So it was effectively an embargo against Chinese goods coming to the U.S. and U.S. goods going to China. And, it's like they had the old Laffer curve. At some point, it just destroys trade. So bringing it down to 30%, which is about, 6 or 7 times more than it was before April 2nd, we'll have some more trade, but it's still going to be very, very expensive. And what people have forgotten is that, back to school spending and all of your Christmas spending, which about 97% of all of that comes from China, is that as people have to spend 30% more in taxes, meaning it's a sales tax on imported goods, and that money is going to the U.S. government, but it's taking up 30% of their spending. They've got to cut back somewhere else. And that's why when we heard Walmart's CEO this morning saying that, they were going to start raising prices probably in the next few weeks, and they had to suspend their kind of projections in terms of sales because they knew it's already softening at Walmart and Costco and Target and McDonald's. So we're already seeing it, but they think once the tariff taxes come in, that you're going to see a real downturn in spending. And as we all know, that's 80% of the U.S. economy. And when that slowdown comes, you're going to see unemployment going up, and that's probably when we're going to see a real recession.
On the Air Live with Paul DIETRICH, Chief Investment Strategist at Wedbush Securities, headquartered right here in Southern California. Maybe Walmart will have to change their slogan, look out for falling prices, to look out for rising prices, based on what we heard from the CEO there today. So that was a big part of the market action today. And we've been watching bond yields, the yield on the 10-year note. That's the one we've tracked here, which impacts, among other things, fixed-rate mortgage rates hit, 4.5% this week. Looks like it's pulled back a bit, but that 4.5% number is what prompted President Trump to back off on some of the tariffs that he had announced previously. Are you watching those bond yields, and what can we expect there?
Yeah, bond yields, it's really like the truth serum. We will know what's going to happen, and if you see, as we have seen, the bond yields going up, that is not a good sign. What's happening, and the reason for that, is that in June and July, we're having this debt ceiling bill, this what Trump calls the big beautiful bill, and we need to pass a budget. And it looks like now that we're going to have, under a Republican administration, the largest deficit in U.S. history this year. And what's happening is that people who buy our debt, both here in the U.S. and foreigners, they're demanding more money because they think that we're just irresponsibly increasing and printing money here in the United States. And we certainly will be doing that this year. Also, as people, because of the tariff situation, a lot of people are selling, a lot of countries are selling down their bonds, holding less. That's one of the reasons why you've seen gold go up this year. And for all of these reasons, I think you're going to continue to see yields go up, and that's going to affect mortgages. It's going to affect student loan repayments. It's really going to have an effect on the economy, and it will make it so that the Federal Reserve will not really be able to significantly lower interest rates this year.
President Trump continuing his Middle East tour with big announcements on the big business deals. Looks like some American companies' stocks have already reacted. Boeing, for example, saw a big jump this week on that big order from Qatar Airways that President Trump had announced. Boeing back above 200 now at 206 and change. What's your reaction to those announcements, and what should investors be aware of with those big announcements?
Well, I think Boeing is lucky to have the president out there, hawking their wares to countries in the Middle East, because what we're seeing is partially it's because of tariffs, is that other nations are cutting back and looking at Airbus in Europe rather than, paying for what will be retaliatory tariffs from their countries eventually. It seems like Boeing products and bourbon from Kentucky are the two biggest things that other countries are raising their tariffs on, and so it's just going to be cheaper to buy Airbus products, and so they need these sales because they're going to see lower sales in the rest of the world. They've had a one-day bump in the stock market. I just don't know how long that's going to last.
All right. Tesla rebounding impressively since we last spoke, ever since Tesla had that earnings report, and Elon Musk on the earnings call saying he'll be stepping away from the government and will be concentrating more on Tesla. Tesla's suddenly rallying to close to 350 once again. What are your thoughts on Tesla here?
Well, Tesla is basically a good company, and I think it will continue to do well here in the United States. It's probably the one car company where more of its car is made, even the parts are made in the United States than any other U.S. car. So it will probably benefit from all the tariffs on foreign cars coming into this country, and with American cars, their prices are going to go up because a lot of their parts come from foreign countries, and so it's going to do well. But in the long run, and Warren Buffett has talked about this, in the long run, if you look at Tesla and global competition, they seem to be, the Chinese are just nipping at their heels. They're producing cars, these cars cheaper, and they're marketing them at much cheaper rates. And in some cases, their batteries are superior. And so the competition is really going to be heating up for Tesla in the long run. For a long time, it was kind of out there by itself. I don't think that's going to continue in the next 10 years.
All right. And of course, President Trump with Elon Musk in the Middle East. Jensen Huang also from NVIDIA, which has also seen a pretty good bounce back. I believe recovering pretty much all of its losses this year, right? Up around 135, the Magnificent One, and the overall, the Mag 7 names. Any new assessment on those?
Well, again, part of that is the excitement of now they're going to be able to sell to a whole new range of companies in the Middle East. They were precluded from doing that under the Biden administration, and so President Trump has expanded the market for NVIDIA chips in the Middle East while still trying to keep them out of China. But again, if you look at the long term, NVIDIA has kind of been a sector of its own almost.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Let's get inside of Jack Osbourne.
Bands would say Black Sabbath was a huge influence.
And thank God you liked it, boy.
Yeah.
Elijah Wood.
Peter gets on the phone. Elijah, would you like to play the role of Frodo?
Did you cry?
Probably screamed at the top of my lungs.
You play iconic characters, Black Canary and Black Siren. Who would you choose?
Probably Black Siren. She's like, I got this. And that's how Katie Cassidy feels. She's got this.
I like that.
The Inside of You podcast. Follow and listen on your favorite platform.
But now you're seeing other chip companies starting to nip at their heels and provide real competition for the higher end, which is the really profitable chips. And I believe you're going to see other countries, especially China, producing chips that at least the industry is arguing is almost as good, if not as good, as NVIDIA chips. So again, it's great when you have no competition, but the long run, those price earnings ratios of NVIDIA have got to come down, and will.
We saw a pretty good M&A deal announced today. The Dick's Sporting Goods chain buying Foot Locker in a deal valued at $2.5 billion. Your reaction to that deal, and are we about to see more M&A activity this year?
That's a good question. Normally, if we go into a recession, you probably, M&A activity kind of cools down. But we're gonna have a recession, and then we're gonna have another bull market, and it'll come back. So, by the time the lawyers get into putting these things together, the recession will have passed, and we will be going forward. And so I think there will be a lot of M&A activity, but probably not for about 18 months.
All right, before I let you off the hook, any specific places where you are putting money now and or taking it off the table? Gold
is one. We're looking at people starting to sell the U.S. dollar, and that's why normally when the stock market's going down, the dollar's going up, and that hasn't always been the case in the last few months. And I also think that given that we're coming up to this debt ceiling vote that will probably take place, according to Secretary Bassan, in August, and this is not one of those things where the government gets shut down for a few days. This is the debt ceiling vote. This is where we default if it shouldn't pass. It's going to pass, but it's going to be a game of chicken going forward. And again, we're going to have one of the highest deficits in a long time. So it's going to cause a lot of volatility in the markets as we find out. There are two groups in Congress within the Republican caucus because the Democrats aren't going to help at all with passing this bill. And you've got those that want to make deep cuts in the in the budget, and then with all the tax cuts and all the new spending, that's more than offsetting the deep cuts that they've kind of agreed to. And so it's a question as to how they're going to work this out within the Republican caucus, but it's going to cause a lot of volatility and a lot of problems between now and that August vote.
Paul, thank you very much for taking the call this afternoon. Paul DIETRICH, Chief Investment Strategist at Wedbush Securities, based right here in Southern California. Thank you very much, Paul, for your always thoughtful analysis and for joining us live here this afternoon on Mottek On Money on 790 KBC. Frank Mottek here. I want to take a moment to talk about owing taxes and my trusted friends, Ultimate Tax Group. If you owe back taxes or have unfiled returns, the IRS offers Fresh Start programs. Now seize this rare chance now and call Ultimate Tax Group at 888-711-4850 and see why they're different than other firms. They'll actually call the IRS with you on the phone to gather your current account information, but will also go above and beyond that to request the IRS to grant you immediate protection from collections actions like bank levies and wage garnishments. Other companies charge $500 to $1,000 for the service, but Ultimate Tax Group won't. A-plus rated 5-star service with direct access to ownership and upper management while they work on your case. Just tell them Mottek sent you. Ultimate Tax Group, give them a call now. They're the best. 888-711-4850. Again, that's 888-711-4850. They care and fight for their clients. Mottek On Money continues 790 KBC, recapping the day on Wall Street. The Dow up 272 at 42,323. S&P 500 of 24. The NASDAQ slipping 34 points. The yield in the 10-year note, 4.43%. The price of oil hovering just below $62 a barrel. Gold of $21 at $3,247 and change here. Taking a look at the cryptos now, Bitcoin up about 500 to 103,710. Ethereum at 2,560. Solana at 170. And Doge at the moment at 22 cents. And now the latest news on 790 KBC. Mottek On Money continues. 790 KBC standing up for taxpayers here in California. A new initiative to save Prop 13 has been filed by the Howard Jarvis Taxpayers Association. Prop 13, passed decades ago here in California, famously places limits on the annual increase in the taxable value of property here in California. Taxpayer advocates have been working to protect Prop 13. And let's bring in Susan SHELLY now, columnist for the Southern California News Group, which includes the LA Daily News, host of the Howard Jarvis radio show, heard Tuesday nights right here on your favorite station, 790 KBC, as well as our great Cumulus Media sister station, KSFO, in the Bay Area. Susan SHELLY, thank you very much for taking the call here this afternoon.
Thank you, Frank. Great to be with you.
Wonderful to have you with us here, and it's been a while since we've chatted behind a live microphone, so give us an update and the news here on this new initiative to save Prop 13 here in California.
Well, as you know, we have been watching these taxes get passed through a loophole, the Upland loophole we call it, because it came from a case that the Supreme Court decided in 2017, the state Supreme Court, a case out of Upland, California, that said essentially if a tax increase is proposed by a citizen's initiative instead of by a city council, the Constitution doesn't apply. So it might need a 2/3 vote according to the Constitution, but if the citizens put it on the ballot, then a simple majority is enough. Well, California taxpayers are now paying billions of dollars in extra taxes that have passed because of this loophole. And we've just had enough of it. So this is an initiative. It will be out for signature collection in a couple of months, and it is going to close the upland loophole and make it clear that the Constitution applies to all tax increase proposals, no matter how they get on the ballot. Even if Elon Musk shoots them onto a ballot with a rocket, it needs a 2/3 vote.
All right, so this is very important to protect the idea behind Prop 13, right? Maybe you can educate our listeners here about the importance of Prop 13.
Well, before Prop 13 was passed in 1978, here's how your property was taxed. It was a statewide average of 2.67% of the current market value of your home every year as a condition of keeping it. And what Prop 13 did is it said the taxable value of your home is no longer the market value of your home every year. Instead, it can only go up a maximum of 2% a year for as long as you own your property. And the tax rate was cut to 1%. And then to make sure that the government didn't come at you with another tax by another name, Prop 13 required all local taxes to go on the ballot for voter approval. And special taxes for a specific purpose require a 2/3 vote. And that's what this upland loophole has tried to attack. And we're tired of the courts just reinterpreting your rights away. We've had it with that. So we're going to go back to the ballot. We're going to make it clear that the Constitution means what it says. And we're going to need about 875,000 valid signatures, and then we will get this on the 26th ballot.
All right, and so people can keep an eye on this. Does this have a name? Does this initiative have a name already?
Well, it has the name that we've given it. We don't know what the Attorney General will call it on the circulating petitions, but we're calling it the Save Proposition 13 Act of 2026. And everybody can go to hjta.org, sign up for free email alerts. We'll let you know when it's ready.
All right, we'll keep an open line to you on that big news. And you've been following what's happening in Sacramento with the state budget situation and Governor Newsom making some big announcements, right? What's your reaction to what's happening there in Sacramento?
Well, I'm especially concerned about his intention of renewing the cap and trade program until 2045. Now, the cap and trade program is technically not a tax, but you wouldn't want to live on the difference. It acts like a tax. It's a special fee that has to be charged to any refinery, utility, manufacturer. It's raising the price of gasoline by, I think, 23 cents a gallon right now, could go as high as 74 cents a gallon. And they want to extend this. It expires in 2030. They want to extend it to 2045. It's a complete waste of money. 25% of the money they collect from this goes to build the bullet train. And this is why they want to extend it, so they have money for the bullet train. Why should you pay more for electricity, for gasoline, for everything that's made or moved in a truck in California? To build the bullet train. It's a tax, and it has to be stopped. So I hope everybody will call their representatives and say, do not renew cap and trade.
All right, the other big announcement, you propose scaling back health care for undocumented immigrants here in California. That's a big announcement and a big reversal from years of what's been happening, right?
Yes, it is, and it has to be done because we have a deficit of just about what we're spending on providing full-scope Medi-Cal to undocumented immigrants. Just to be clear, all states, including California, always provided emergency care, pregnancy care, and a few other things. That's called restricted scope Medi-Cal or emergency Medi-Cal. What we were changing that to was full scope Medi-Cal, which covers specialists, prescription drugs, long-term care, dental care, everything. Well, this is the safety net program for low-income Californians. And Governor Newsom and the legislature opened it up to the whole world. Everyone who comes in illegally can sign up for this, and it's all on the California taxpayer. So that's not sustainable. Of course, he has to cut it back.
And this is something John Phillips and Randy Wang have been talking about, and with you as well, Susan. So we'll continue our coverage of that big news as well. Appreciate your joining us here on the big news here to the latest initiative to save Prop 13 here in California, filed by the Howard Jarvis Taxpayers Association. We'll continue to follow that closely with you. Susan Shelley, columnist for the Southern California News Group, which includes the LA Daily News. She's also host of the Howard Jarvis radio show, heard Tuesday nights here on 790 KBC and our great sister station in the Bay Area, KSFO. Susan, thank you very much for joining us live here this afternoon.
Thank you, Frank. Great to be with you.
Likewise, thank you very much. And now to the freeways now here on 790 KABC. So I want to take a moment to talk about owing taxes and my trusted friends at Ultimate Tax Group. If you owe back taxes or have unfiled returns, the IRS offers Fresh Start programs. So seize this rare chance now and call Ultimate Tax Group at 888-711-4850 and see why they're different than other firms. They will actually call the IRS with you on the phone to gather your current account information, but will also go above and beyond that to request the IRS grant you immediate protection from collections actions like bank levies and wage garnishments. Other companies charge $500 to $1,000 for that service, but Ultimate Tax Group won't. A-plus rated, 5-star service with direct access to ownership and upper management while they work on your case. Just tell them Mottek sent you. Call Ultimate Tax Group now. They are the best. 888-711-4850. Again, the number to call, 888-711-4850. They care and fight for their clients. Mottek On Money continues here, 790 KABC. Nervous times for LA businesses facing an eye-popping increase in the minimum wage. The LA City Council this week voting to approve a package of minimum wage increases for workers in the tourism industry. Despite objections from Los Angeles business leaders and business groups, the proposal would require hotels with more than 60 rooms, as well as companies doing business at the Los Angeles International Airport, to pay their employees $30 an hour by 2028. All this translating to a nearly 50% hike in the minimum wage for hotel employees over the next 3 years. Airport workers would see a 56% increase. Joining us live now is AIDAN CHAO, chairman of LA Tax, the Los Angeles County Taxpayers Association. AIDAN, thank you very much for taking the call here this afternoon.
Thank you, Frank, for having me.
Wonderful to have you with us. I know you're looking out for businesses here as well as the taxpayer. Give us your reaction to this big news this week.
Yes, we are. What the council calls a raise is really a pink slip in disguise. LA is really still recovering from COVID-level eras tourism declines. International tourism from the UK, from Canada, from Europe is down, not up. And our hotel and hospitality sectors face uncertainty and not expansion. And what this does is you don't hike wages in a vacuum. You do it in a competitive market. And LA is not gaining on this. We're losing ground in this. So what's going on is that this 50% hike is not theory. It's already costing LA jobs, investment, and credibility.
Tell us about the fallout we're already seeing in anticipation of this. This is not a big surprise. There have been other votes on this leading to this latest vote, right? But already it's having an impact here.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Will Wheaton is here.
Getting ready to do this podcast. I text my Star Trek family. That is a supernatural impulse.
If you're here for Jay Moore, you found the right place. Have you always had a large personality?
The nicest way anybody's ever put it. You always warn people out.
From Twilight, Ashley Green.
We were just like, no one's going to see this. This is not going to be a good movie.
I really love the movie.
Don't feel bad.
The Inside of You podcast. Follow and listen on your favorite platform.
Sure, there are real consequences. I mean, the city already has a $1 billion deficit, and this sends the wrong message to employers. And what's going on is Hilton Universal City has already canceled a $250 million expansion and an Olympic block agreement. Operators are cutting valet, restaurants, and staff, and more layoffs are coming. Others are leaving the LA market. Thousands of employers are leaving the LA market. And what's going on is the bottom line is that this isn't about workers, it's about politics. The only winners, really, are the unions that demanded this.
I know you've been doing this for quite some time. Are the business concerns falling on deaf ears there at City Hall, and also concerns about taxpayers as well falling on deaf ears at City Hall?
Certainly. City Hall is absolutely ignoring this. It went 12-3. The only 3 council members that voted for this are council members Lee, Park, and Rodriguez, voted against. The people that backed this were the SEIU and unions. There was no independent economic analysis. And the bottom line for us, the taxpayers, is that policy should be built on data, not slogans, and raising wages while slashing jobs is not progress. All it is performative, and that's exactly what's going on, and businesses do not have a say.
On the live with AIDAN CHAO, the chairman of LA Tax, the LA County Taxpayers Association. You put out a news release and a statement about this. Headlined, LA Tax $30 minimum wage vote is a blow to LA's economic future. What should be done at this point now? Are you calling on the mayor and the city council there to reverse this decision?
Well, we certainly call for a mayoral veto, and we also propose for a task force of business, labor, and economies to chart a sustainable path. Economic justice means jobs and opportunity, not empty promises that collapse under their own weight, which this is exactly going to do. What's happening is we are going towards Olympic 28, LA 28. If this is how we prep for the Olympics, Frank, investors will flee before the torch is even lit. We are absolutely going down the wrong path, and what we as LA County Taxpayers Association supports is for targeted support for proper minimum wage hikes or for wage hikes in general, not blanket mandates. The issue is that we need to look at a public-private partnership, and that's what the LA County Taxpayers Association would do, is encourage that through a representation of business voices in City Hall.
We've heard similar situations in New York where they've raised the minimum wage, and all of a sudden restaurants and hotels started closing, for example. And are you hearing more those possibilities here and some other impact as this wage increase would kick in?
Certainly. I mean, this sends a chilling message to anyone thinking of doing business in LA. That's the issue. Small and mid-sized hotel operators, often minority-owned, are hit hardest. The workers are also being hit hard as well. Entry levels and part-time workers are losing hours. They're losing jobs. That's the issue here. It's not economically stimulating at all.
And, of course, you've joined the chorus. Other business groups, including the LA Chamber and right down the line, have urged the city council not to do what they just did.
Certainly. I mean, these groups are our partners. LA Chamber, BizFed, they're all of our partners. And what's going on is that LA City Council has issued a declaration. Their declaration is a shot heard around the world. And this is a warning shot to every investor, like I said. LA is closed for business. And when you punish job creators with unsustainable mandates, you don't lift workers up, you push them out. And that's exactly what our business groups are opposing right now.
All right, tell us more about the LA County Taxpayers Association.
Certainly. I mean, our information is at www.la-tax.org, www.la-tax.org. And what we are is a group that advocates for fiscal responsibility, fiscal sustainability, and economic sanity in LA. And we are the only group. We are the first taxpayers association in LA County. We were established 2.5 years ago, and we are the only group that has stood up to the insane taxation, over 300 bonds and tax increases that have been proposed in LA County over the last 2 years. We are the only group that has stood up to that in a major degree. So I encourage everyone to visit us at la-tax.org, contribute, and support our fight against economic insanity and the insanity that you can clearly see from our city council.
It looks like tax hikes may be on the horizon, too, following the firestorms as well. Are you watching what's developing?
Yes, we certainly are. We're watching not only the tax hikes, but we're an association for the taxpayer. That doesn't mean we just watch for tax increases. We also watch for fiscal accountability. The taxes that are already collected are monies that we are still looking after, right, for taxpayers. And so we're looking at the recovery. We're looking at the fact that they are opposing the suggestions of Steadfast LA, which is promoting, a speedier recovery with speedier permitting and zoning. We're watching over all of that. Right now, we see a horrible job being done on recovery in the Palisades and Altadena areas. And what we're supporting is more accountability over the city council and mayor.
Aidan, thank you very much for joining us live here. That is Aidan CHAO, the chairman of LA Tax, the LA County Taxpayers Association, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz, followed at 6 by the Just Help One radio show and podcast presented by Union Rescue Mission. here on 790 KABC.
I'm Paula Pan. I help people make the smartest money decisions possible because let's face it, money's too important to wing it.
What you'll hear is a couple money geeks sitting and talking about this stuff that we're so passionate about.
You name it, anything that's on your mind, retirement, debt, student loans, saving for college.
It's a personal finance journey. It is a wide-ranging squirrel conversation about the topic of personal finance and good financial planning. Super fun.
Afford anything. Follow and listen on your favorite platform.